If you've ever looked at investment opportunities in Africa, have you ever just felt a bit lost? I mean, with the sheer scale of it all, the headlines going back and forth, and just no clear starting point for someone like you, an independent investor? Well, if that sounds familiar, this is for you. We're going to break down a new practical playbook that cuts right through all that noise. This right here is the number one mistake people make. They treat Africa like it's a single country. It's not. It's an incredibly diverse continent. So the first, most crucial step is to just drop that monolithic view and start looking at it with a localized, city-by-city lens. And that's exactly what this playbook helps us do. For the longest time, the whole conversation has been about these massive, state-led mega projects. But the real, get-in-on-the-ground-floor opportunity for private capital, for people like us, it lies in a much more nimble, ground-tested approach. So what if there was a playbook for that? For the rest of us? This isn't some academic theory. It's a totally new way of thinking about market entry, and it's designed specifically for those of you who work independently and want to see a real return on your money and your time. Okay, so how are these specific opportunities even chosen? You might be thinking they just threw a dart at a map, right? No, not even close. There's a really rigorous and super practical set of criteria behind every single idea in this guide. And this is what makes the whole thing so powerful. We're not talking about hype here. We're talking about real, ground-tested demand. Every opportunity is tailor-made for smaller-scale private investors. It's been vetted on the ground for feasibility, and it strategically lines up with both U.S. innovation strengths and key African development goals. That foundation is what makes it so credible and, honestly, so actionable. All right, enough with the framework and the theory. Let's make this real. We're going to walk through 3 completely different examples from the playbook so you can see exactly what these opportunities look like out in the wild. First up, let's go to Nairobi. Kenya has this amazing digital ecosystem, right? I mean, things like the mobile money service M-Pesa totally changed the game. But, and this is a big but, there is a huge gap. Over 70% of rural areas don't have consistent access to even basic primary healthcare. That gap? Well, that's the opportunity. And this is where it gets really compelling. Just look at the numbers. Startup capital can be as low as $15,000 with a potential return in just 12 to 18 months. That's an incredibly accessible, high-impact way in for tech-savvy investors. And the secret sauce here? Partnering with trusted local NGOs to build trust and get things moving fast. And that's really the core idea. It's not about inventing something brand new. It's about adapting a model that we already know works, like Teledoc, and tailoring it to a specific local need, using simple tech like SMS or basic apps. Okay, for our next stop, let's head over to West Africa. Burkina Faso is a huge producer of things like mangoes and cashews. But get this, a mind-boggling 85% of it is either just wasted or it's exported raw, which leaves a ton of value on the table. The opportunity here is so simple and so powerful. Turn agricultural waste into wealth. The government is actually pushing for this with incentives like tax holidays, and an investor can get the ball rolling for around 25 grand. Now, the edge here is really powerful. If you partner with local women's cooperatives, you're not only creating incredible social impact, you can also become eligible for ESG-aligned funding. It's a win-win. I mean, just picture this for a second. A $30,000 investment in a simple drying unit can take all those extra mangoes and turn them into a high-value, export-ready product for a European market that's hungry for it. That is a direct line from local surplus straight to global demand. For our last example, let's look at a higher capital play in Dakar, Senegal. The city is growing like crazy, over 3% a year, and that's creating a massive housing shortage. And listen, this isn't some speculative bubble. This is a market being driven by basic, fundamental demographics. So yeah, the startup capital is higher here, but the demand is just off the charts, and it's being fueled by both the growing local population and money coming in from the diaspora. The playbook is really clear on how to manage the risk here. You use trusted local legal teams and you lean into co-investment models. This analogy just nails it. It really puts the scale of this moment into perspective. Think about that. New York City in the 1950s. It's a classic case of huge demand meeting very low supply in a city that is absolutely booming. Okay, now I want you to lean in for this next part, because it might be the single most important insight in this entire playbook. To really succeed, you have to make a mental shift. The informal economy isn't some risk you need to avoid. It is the engine of local markets. It's where business actually gets done. So, what exactly are we talking about when we say informal economy? Well, it's the market stalls, the street vendors, the local artisans selling their work on Instagram, all the digital side hustles. It's that huge, vibrant ecosystem of economic activity that's happening outside of official government registration. And just look at the scale of this thing. In a lot of African countries, the informal economy makes up 70, 80, even 90% of all workers. So let me ask you, if you're not engaging with this sector, are you even really in the market? The answer is a hard no. This right here is the mental model for success. You gotta switch your brain. Business here is built on trust-based relationships, not complicated legal contracts. Validation comes from the community, not a government license. And sales, they happen on WhatsApp and Instagram, not on some slick official website. Understanding this shift in thinking is absolutely crucial. Of course, we have to talk about the elephant in the room, risk. But instead of seeing political risk as a big red stop sign, this playbook frames it as a landscape you can navigate, as long as you have a smart, strategic map. And risk is definitely not one size fits all. Look at these 3 examples. You've got Dakar, Senegal, green light, low risk, a great place for new businesses. Then there's Nairobi, yellow light, moderate risk. It's great for tech, but you have to keep an eye on local dynamics. And then you have a place like Kinshasa, red light, high risk, but also high reward. The strategy there is to partner up deeply with local groups. It's all about matching your strategy to the specific environment you're in. Okay, so let's bring this all home and connect everything back to the US innovation ecosystem. Because this isn't a one-way street where capital just flows out. It's about building a genuine two-way bridge of value. Just using Massachusetts as an example, you can see how perfect the alignment is. The state's huge strengths in health innovation and biotech, they map perfectly onto the massive need for mobile health diagnostics in places like Kenya, Nigeria, and the DRC. Same for climate tech and ed tech. This creates this incredible synergy for collaboration and co-investment. So there you have it. From a completely new way of thinking about the continent, all the way down to tangible, city-specific opportunities, this guide lays out a clear and actionable path forward. The playbook is open. The only real question left is, what's your first move?